Bank of Canada just dropped a jumbo rate drop on us, and the stress test, is it really gone, or is there something coming in its place? All this and more with our good friend and mortgage broker, Mr. Dion Begg. Here we are, my friends, with our favorite mortgage broker in all the land, Mr. Dion Begg. How you doing, my man?
Mate, I'm busy, very, very busy. It's like everybody just woke up and said, you know what? I think we believe that interest rates have and will continue to drop. And so the phone is ringing and we're super busy at the moment.
Excellent, excellent. And of course, we moved our recording date, and at the moment when we moved it, we didn't realize that, hey, Wednesday's going to be an interesting day. And sure enough, as we dive into what's going on today, of course, the Bank of Canada reduced its interest rate. Trust me, my friends, we're going to get into that, but we've got more than just reducing the interest rate, and there's lots going on kind of behind the scenes, Dion, as you of course know. But talk to us what's going on, perhaps with your business and that ripple effect of what you're talking to, or about what you're talking to with your clients.
Yeah, so I mean, in my business, we have a process where we speak to clients, we get them pre-approved. Once they have their pre-approval, they go off and purchase a property. That time frame might be 1 month to 3 to 6 months in most regular circumstances. In the last 2 years, we've taken on so many pre-approvals, and they have just held in place. People have just been sitting and waiting on that fence for a time when they felt more confident to move forward. Gary, and you and I have seen, these 3 small rate drops that, had some effect and built the confidence. But then as we're speaking to you today, today we've had a 0.5% drop, which is the biggest drop, or what they call a jumbo rate drop. And there's been so much anticipation that this drop would in fact be coming, that in the last couple of weeks, in anticipation of it, people are like, you know what, we're going the right direction. So all these people who are sitting on the fence are basically calling us back saying, okay, it's go time. We are now back in the game. We're ready to move forward. We've got a lot of realtors reaching out as well with clients who we haven't necessarily met. But like, Dion, please talk to these guys, because now, after waiting for 2 years, they're also now ready. So I think you'll see a lot more action and movement in real estate. And I'm speaking with a lot of second-time buyers. So people moving out of their first home into that second home, which in turn creates space for those first-time buyers at that lower price point as well.
And this is, we're going to get into the interest rate changes and so forth. And we got a little historical image that we're going to share with you as well. The interesting ripple effect too is, we often think about getting a mortgage on a brand new property, but as for the last couple of years, you and I have been sharing these videos and podcasts with, there's a lot of refinances or renewals that are coming up. And this is, in fact, maybe a little good news for those renewal rates. Wouldn't you agree?
Yeah, most definitely. I mean, I'm sure anybody who's going to renew next year after, and there's a big chunk of them, they're sitting there with dread, saying, how can I jump from 2 point something to 6 point something, which it was last year? Thankfully, now we're going to be in the 4s or 5s, depending on where you are. And if you wait another 6 to 12 months, we could very well be another percentage point or more lower. Before today's rate drop of 0.5%, people were saying that we were looking at potentially up to 2.25% more in drops, which means if those people are correct, we've still got 1.75% in drops ahead of us between now and December next year.
Yeah. Good stuff. Okay, one of the things that I love hearing, and I know our listeners do because we see it in the comments, is those real life stories, Dion, and how you're helping and supporting your clients in whether it's the right mortgage product or a different interest rate or getting them into the right solution. Share with us what you've kind of helped with some of your clients this past week.
Yeah, so I mean, so many phone calls this week, and I'll share a couple with you that listeners might relate to, but depending on the situation. So again, so these guys, I spoke to them about 1.5 years ago. We got them pre-approved. They were financially strong, but again, they just weren't ready to make that jump based on the choppiness of interest rates at the time. Spoke to them this week, and what we discovered is, for the same loan amount, in their case, $700,000, where interest rates are and where the 30-year AM kicks in December 15th, that same mortgage is going to cost them monthly $1,290 less than it would just 18 months ago. And with the knowledge of that, they're like, yep, we're ready to go come December 15th when we get access to the 30-year AM with rates dropped from 6.5 to 4.5 or lower. They're now out there ready to buy. So just for those of you who might be a little disheartened and maybe got pre-approved or ran your numbers a year ago, just know that right now those numbers are significantly better. In this case, nearly $1,300 a month cheaper. So that's one example. Another is some clients who I was chatting with them and their realtor, and they're buying at just around that $1 million mark. And as we all know, that $1 million number is the number up to which you can get mortgage insurance today. But after December 15th, that's going to increase to 1.5 million, right? And what their realtor is suggesting is in the pocket that they're looking in, which is a desirable pocket, those sellers may, after December 15th, increase their prices because they know that they're going to still have access to the first time home buyer market who has less than 20% down. And that, those prices might jump 100 grand. Again, I don't know if this is to be true, but I do know that there are some pockets in the GTA that are moving faster than others. So that's maybe something to consider, in that if you want to deal with less competition, it might be an interesting thing to think about buying now prior to the December 15th change.
Yeah, and that's an interesting segue too. Is the fact that historically we've all seen it, we've lived it, we consumed it as those interest rates really dropped, especially 2020 2021, that type of thing. We saw the number of sales skyrocket. My friends, we're not there. So if you're
Mm.
worried about prices moving really quickly up in the upwards direction, we're not there. In fact, most sellers would say, I'm happy to get those showings which lead to the sale of the property, and sales are still down year over year. So all this news is good news, but just know that there's still lots of opportunity. There's lots of listings, lots of things to look at, whether if you're in that condo segment, detached, whatever it is, there's still lots of availability. And I don't know the number right off the top of my head, and you never really want to know the number off the top of your head for the general, months of inventory for your city. You want to know your area. That's the most important piece. Dion, you quickly mentioned, I want to circle back to it, the stress test. And in the last couple of videos, we got, you shared some news about, hey, they're removing the stress test, or how the stress test is calculated for moving your mortgage from one lender to
Moving a
another.
pure switch, correct? Yeah.
Exactly. And there's a little bit of relief, as you will, from a lot of borrowers. You've done a little bit more digging and what may replace that. So this isn't in action at this moment, but however, there
Correct.
may be a new tool coming in. So talk to us about that.
Right. So the changes that we've seen recently as they relate to the stress test are purely for people who already have a mortgage and want to simply move their mortgage in what we call a switch from bank one to bank two, lender one to lender two. But the OSFI, which is our regulator in the mortgage world, they're the ones who implemented the stress test years ago. And there's been discussion in recent years about changing that stress test. So the superintendent has said that they next year are going to experiment with a different type of test with banks called a loan to income test, LTI. Okay. So on one hand, I'm telling you, removal of the stress test is on the cards, and that sounds like a good thing. But the question is, are they replacing it with something that's going to help you or hurt you even more in terms of qualifying? And when I look at this, it might actually be in the negative. So what they're talking about is, and I'll simplify it here. The regulator is going to go to the banks and say, hey, banks, for every 100 mortgages that you do, only a certain percentage, and they're talking about, say, 20 or 25%. So let's just say only 25 of those 100 mortgages can exceed a ratio of income where the loan amount is 4.5 times greater than the income of the borrower. Simply put, if your income is 100 grand, they're going to cap your borrowing at $450,000, right? And they will make exceptions only to maybe 25% of their clients, right? So, for some context, in the last couple of years, as interest rates have been up around the sixes and qualifying rates in the eights, the most that anybody could actually qualify for was closer to four times income. Okay, so that's been the historical case the last year or so. As rates have dropped, now I'm consistently getting people qualified for closer to 5 times their income, right? And the implementation of something like this would actually drop their borrowing power from that 500 down to the 450, right? So it is looking like, this in fact may make it a little harder. The question would be, how will the banks decide who they allow to exceed that 4.5 times, because they're only allowed a certain quota? And my guess is it's going to go to people with super high credit scores and or good net worth, right? Or debt service ratios under the old system, which are clean as well, right? So um, for all those things, your credit, your savings are going to be more important than ever if this test or this new LTI, loan to income test, comes in.
I'm analyzing this and I'm digesting it as you're saying it. And the interesting thing here is kind of like OFSI is saying, you know, it's no longer on the individual borrower. So here, I don't have a rule for you, but I got a rule for the bank.
That's
And
right. They're
now they're
taking the
making,
burden off the borrower and putting the burden on the bank, right?
yeah,
Yeah.
and they're making the bank look like the bad guy here in a sense. And you know, we say it kind of tongue in cheek in a sense that, hey, we want the accessibility of funds to be, somewhat easier for a lot of borrowers. I get it, in the big picture here, OFSI, the Bank of Canada, is protecting the Canadian citizen. I was going to say homeowner, but citizen borrower. So we kind of get that piece of it, but it's interesting the kind of how they've kind of taken away the onus on the individual borrower and put it on the
Right.
bank.
And
However,
putting it on the bank.
we kind of we think out loud sometimes. That's what we do on the
Mhm.
show here. It's interesting. It's important to stay in tune, my friends, with what's going on. And this isn't into action at this present moment. However, if it is coming into action, we got to be educated on it. Okay, so let's talk about, we're getting into the end of the year. I can't believe it's literally Halloween next week, and this,
Yep.
and which brings us into November. November, all of a sudden, we think winter and we think end of year, and December is just around the corner. And I don't know about you, Dion, and I know we've shared this in some of our videos over the years and seminars, workshops that you and I have hosted together. Sometimes the best opportunities end up coming to us at the end of the year. Have you, are you still starting to see that? You seen that, just that window or that crack of the door opened a little bit?
Yeah, definitely. In fact, yesterday I spoke with some clients who own two properties, both of which they said they purchased in the dead of winter. And the reason they're talking to me in October is because they plan to purchase again. And they're the ones who are willing to go out and buy when everybody else is on holiday and warm inside drinking cocoa and, pumpkin spice lattes.
Yeah. Yeah, exactly. It's an interesting, I have a listing coming up in Stouffville in the next week or so. And obviously, to get that home sold, we want it sold as fast as possible and everything else. And there's no change in that mindset. However, there's always opportunity for people to both sell and buy as we lead into these closing months of the year. And 2024 has been a really interesting year in the real estate world. And also, Dina, it's probably a good time to kind of remind people of where we came from to where we are today with the interest rates and leading into the new year. So everyone's kind of prepared. And so what we're looking at here, my friends, is the interest rate changes over the last 7 years. And the purple that you see here is the interest rate change. So the little smaller hash marks would be a 0.25 or a 1/4% change, 25 basis points. The blue or the purple there is, sorry, the blue is where that interest rate is at that present moment. So you can see, and I think people kind of forget this. We saw interest rate bumps in 2017
Yep.
and we forget it, right? It was 7 years ago. We kind of forget it, unless you were, perhaps trying to sell a home after they kind of fell off the cliff there. But you can see how quickly those interest rates rose and where we sat in the 2022, 2023, and now we've seen this is the fourth rate reduction in a row, right?
Yeah, that's right. So the fourth, and this fourth one being 0.5%. So it's what they call a jumbo rate drop, and again, sort of the United States paved the way for us there, as well as the fact that, and we didn't mention this earlier, Gary, inflation. Did you see the inflation number? 1.6%. And many people saying that if you take out shelter costs, we're pretty much at zero right now. So we're at this point where 2% is the target. We're clearly below 2%, and people are saying that the 0.5% we got today will probably be followed with another 0.5% at the next meeting, which is in December.
Yeah, yeah. And I'm a visual person. That's why I like seeing it visually here. It's are we and you led to you said this earlier in your earlier comments, perhaps the industry is calling for more interest rate reductions, and we may see this into the new year. I guess the question is, and Dion, I can't recall, are we scheduled for one more rate announcement before the end of the year?
Yeah, so the way it works, Gary, is they do it about every 6 weeks, which means about 10 times a year. And so we're looking at 6 weeks from now, which takes us, I don't know the date, but it's middle of December sometime, probably early December. Yeah.
Right, right.
Yeah.
And it affects everything. It affects the way people shop, at your local stores, especially around Christmas time, right? For Christmas and that type of thing. And as we lead into the new year, just remember this, my friends, is as we said, there's opportunity in the closing months of every year for purchases, and sellers. Most sellers are buyers as well, so you buy and sell in the same market, and we might be leading into, I don't want to say a ramped up January, but it'll feel like it, and I'm predicting it a couple of months in early here. It'll feel like it, but it'll just be like every other January. It'll feel busy because we haven't been that transactionally busy for the last several months. So just understand what's going on in the market as sales kind of ramp up ever so slightly, leading into
Yeah.
January.
On that point too, Gary, this rule change that comes in December 15, I've had realtors and clients call me and say, "Hey, Dion, I know I can't buy for over a million or get a 30-year AM until December 15th, but if I purchase a property today and sign for it, can I close on December 20? And can you guys submit the deal to the lender on December 15th?" And the answer is no. Don't do that. Okay?
Yeah.
Because everybody's thinking the same thing. Also, we're going straight into the holiday season. I think the timing of this rule change around this 30-year AM and 1.5 mil, it's coming at a time of year which we all know is pretty much the deadest time of year for purchasing or transacting, which is probably a smart thing, because if they did it on the 1st of March, they would create like a powder keg explosion of all these people coming into the regular spring market, which is usually warmer and busier. On top of that, and laying on top of that these new rule changes, which would throw some real fuel on the fire. So I feel like December, January, February will be the time in which we sort of get used to these new rule changes. And for that reason too, I think that this winter, especially into the new year, will be busier than a historical winter time.
Yeah, yeah, good stuff. All right, my friends, it's always important to stay educated in your real estate world, and whether you're looking to purchase, buy, sell, and invest in real estate, or stay where you are and renew your mortgages. You know who to reach out to. Dion, remind us how to get a hold of you.
Yeah, kangamortgage.ca or the Dion Begg at Instagram.
There you have it, my friends. So that's Dion Begg. I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.